Today I'll be talking about one of YouTube's most influential personal finance YouTubers, Humphrey Yang, and what I view as the 7 most useful financial advice from his channel. Stick around, because these 7 financial rules could quietly put you ahead of 90% of people. Because here's the truth. Building wealth isn't complicated, it's just boring, and most people skip the boring stuff. And if you master these 7, you don't need anything else. Let's get into it. Advice number 1. Think net worth, not just income. Most people track their paycheck, but very few track their net worth. And that shift changes everything. Your bank balance is a snapshot. Your net worth is the full movie, giving you the full picture of your financial well-being. It's everything you own: investments, retirement accounts, property equity, minus everything you owe. You can make $120,000 a year and still be broke if you're drowning in debt. You can make $45,000 a year and be financially stable if your assets are quietly growing. Humphrey constantly emphasizes this because it shifts your question from, "Can I afford this?" to, "Does this grow or shrink my future?" So what I take away from this as a practical move for you is to track your net worth once a month. Use a spreadsheet. Free app. Doesn't matter. Whatever works best. If you'd like, I also provide a free personal finance tracker to my followers, so go into the description below and find out how to download it. Because once you see your net worth move, even slowly, your behavior changes, whether you have a high income or not. Advice number 2. Compound interest starts now, not later. This one hits hard. 2 people invest. Person A invests from 22 to 32, then stops. Person B starts at 32 and invests consistently forever. Guess who usually wins? The early starter. And this is what Humphrey does well. He shows real numbers that make you uncomfortable in a productive way. You don't need $10,000 to begin. You need time. Every year you delay investing isn't neutral. It's expensive. Starting with $50 a month at 22 beats $500 a month at 35. The math doesn't care about your excuses. And that's the point. Advice number 3. Index funds are the default. There's a lot of noise in investing, like stock tips, options trading, crypto cycles, and beating the market. But Humphrey keeps coming back to one thing: low-cost index funds. Historically, over long periods, broad market index funds outperform the majority of actively managed funds. They're diversified, they're low-fee, they require zero constant decision-making. If you don't have a specific reason to do something complex, simplicity wins, consistency wins, and time wins. And that's not basic advice. That's what many professionals do privately. Advice number 4. Your credit score is a financial asset. A lot of people either obsess over their credit score or ignore it entirely. Both are mistakes. Your credit score is driven mostly by payment history and your credit utilization. Together, that's roughly 65% of your score. And here's why it matters. The difference between a 640 and a 760 credit score on a mortgage can cost you tens of thousands in interest. That's not a vanity number. That's real money. Treat your credit score like leverage, because that's what it is. Advice number 5. Automate everything. Willpower is unreliable. Systems are not. This might be the most underrated piece of Humphrey Yang financial advice. If saving requires a decision every month, life will win. But if money automatically flows to things like a 401k employer match first, Roth IRA next, and then brokerage account after, you adjust your lifestyle around what's left. You remove friction. You remove decision fatigue. You build this once and let the system carry you forever. Advice number 6. Emergency fund is non-negotiable. This isn't sexy advice, but it saves financial lives. 3 to 6 months of expenses in a high-yield savings account, not invested, not in crypto, not in stocks. Why? Because without it, every emergency becomes debt. For example, car repair, you might use a credit card. Layoff, you might get a personal loan. Medical bill, you might pull investments at the worst time. This emergency fund is insurance. And in today's rate environment, high-yield savings accounts actually pay meaningful interest while it sits. It protects everything else you're building. Advice number 7. Lifestyle inflation is the silent wealth killer. This one separates high earners from wealthy people. You get a raise. Your spending rises to match it. You might buy a bigger apartment, nicer car, more subscriptions, and better vacations, and suddenly, you feel just as broke as before. Humphrey's approach isn't never upgrade your life. It's when your income rises, increase your savings rate first. Even splitting a raise 50-50 between lifestyle and investing changes your trajectory dramatically. Most people don't lose financially because they earn too little. They lose because their spending keeps up perfectly with their income. So let me wrap this up into the bigger picture now. Here's what makes this advice powerful. None of it is revolutionary. Follow these advice. Track net worth. Invest early. Use index funds. Protect your credit. Automate savings. Build an emergency fund. And control lifestyle inflation. This is all just financial common sense. But common sense isn't common behavior. And what Humphrey does better than most is make simple principles feel actionable instead of overwhelming. If you master these 7, you don't need stock tips, you don't need perfect timing, and you don't need a finance degree, you just need consistency. Simple doesn't mean easy, but it does mean you can start today. If this or Humphrey Yang helped you think differently about your money, hit the like and subscribe buttons, because we break down personal finance in ways that actually move the needle. Props to Humphrey Yang for consistently giving solid advice to the average people. If you had to pick just one of these 7 to improve this year, which one would it be? Let me know below. If you like this video, here are 2 other videos that could help you build your rich life.